Hello everybody, welcome back to the channel. Today I'm talking about the top 3 option plays for the week. These are plays that I will be looking to put on. As you know, I like to sell options and have theta work in my favor, so these are going to be positions where you expect to make 1 to 2% a month. You know, it's not much, but it adds up over time. So one of the first ones I want to look at is actually going to be the ticker X. And this is the United States Steel Corporation. So in last week's video, Alternative Investments commented to look at this stock because it's been beaten up recently. I looked at the chart and actually put on this trade already, but the price has actually gone down, so you might be able to get a better fill than I did. Anyway, as you can see, the trend line, we're still trending up even though we've had this trend, the short-term trend down to the bottom of this little trend here, this channel. And I like this, so the only thing I don't like is that earnings is coming up on 10/28, so this would be a play that might have to go through earnings depending on how far out you want to go to collect that premium. And the volume of this guy usually sits around 23, so anytime you can get below this this level of support at 20, you should be sitting pretty good. If we look at the news, there's not really much going on here. There's a couple of fluff pieces saying this is a stock to buy now, so that can only help us if we're taking a bullish position. I'm going to take that off. So anyway, looking at this, I still want to be below at least 20. If you want to be really safe, 16. But I think if it gets down to this area here, you can roll a position out in time to collect a premium or a credit. So let's go ahead and take a look at what we can set up for a trade here. Now, I actually have already put on 10 contracts for November 19th. I did the 19. I sold the 19 put here, and then I bought the 18 put, and I received a small credit for that. I think it was $12 per spread. But if you want to be safer, get before earnings, which was 10/28, so you'd be looking at a couple weeks out here. And again, you probably want to look at the 19 level. I just feel like it's pretty safe. Probability out of the money is actually about 80%, which is really nice. If you sell this, you could probably sell this for about 32 cents. Get this filled at 18 cents. And that's a 14-cent credit per 100 risk, and that'd be a 14% return in 19 days if X stays above 19 by the time you get to expiration. So I think that's a pretty cool trade. Put on as many contracts as you're comfortable with the risk, because if your spread gets breached, you probably don't want to take assignment of the stock. Although in this case, I think you could. So if you want to use the spread, sell the 19, buy the 18. If you don't want to deal with spreads and you want to be a little bit safer, you can just go ahead and sell the 18, or maybe sell the 17.5. It'll take more collateral to hold the position, but then you can take assignment of the stock, or you can roll it easier if it comes down to that. And then you up your probability of being out of the money to 86% or 89%, which is pretty high, especially for just a 19-day hold. All right, so next up, I'm going to be looking at Palantir. This is a stock I love selling puts on. I'm pretty bullish on them long term. But let's go ahead and look at the chart and see what's going on. So first off, you can see we kind of broken out of this little trend that was happening, this channel. Let's lower this real quick and take a look at a shorter time frame. And you can see we have an expanding channel going up, even though we look like we broke through that too. So not too helpful in that regard. Let's go back to the 1 year, 1 day. And again, you can see we have supports around 20 here. It goes there for a long time. A lot of price action looking at this volume profile here at the 25, 24. So it's going to take a while for it to get down to like the 21. We have earnings on 11/11. So we want to end this play before that. I don't like to hold plays through earnings if I can avoid it. Zoom in here. You see the volume's been pretty consistent, and it's just been traded inside this channel here. Let's go ahead and think about where we want to be in terms of our strike prices. We'll zoom back out here a second. 1 year, 1 day. And again, I want to be around the 20 mark here. You see many times it's bounced off the 20, so that's a nice little level of support. And if we get assigned at 20, the next time it bounced up was at 17 or 18, so we could roll our position if we need to get below that pretty easily. So I'd be looking at the 20, maybe 21. Let's see what the premium looks like here. We said the earnings is 11.11, so we can sell up to the 11.5 here, so that's good. 33 days out. And right off the bat, I see the 20 strike pays a little over 25. That's a little bit over 1% return on a 33-day hold. So that's actually probably where I'll be looking. If you're going to be a little bit more aggressive, you can go ahead and do the 21. That'll be a 2% return for a month hold. 77% chance of being out of the money. That might actually be what I'll be looking at. Is I'll be looking at the 21. November 5th, 21 strike, 40 cents. If we're going to hop into the analyze here, add simulate trade, and we can take a look at that. We sell this guy, and we'll take a look at this one as well, but we'll hide it for now. Then we go to risk profile, and you can see our break-even point would be 20.61 because we're collecting a pretty nice credit for selling the 21 strike, and we make $40 on this trade per contract that we do. If instead we want to do this one, our break-even drops all the way down to 19.74. So if you want to stay, if you think 20 is the support level, having your break-even below that is pretty nice. You only receive $25 for this credit for this trade, but at the same time it's a little bit safer because it's $1 further away from the money. So those would be two possible trades you could do on Palantir if you want to play that one. The next guy I'm looking at, there's nothing too fancy about it. We got Realty Income, ticker O. This is one that I don't mind holding long term because you get paid a dividend every month while you can sell covered calls on it. And recently, we've been doing the stock's been getting beaten up a little bit. It's dropped from 72 all the way down to 65. A nice little volume of support level here, but if it does drop, it could get down to 60 again. And for a long time in the past, it was trading between 58 and 62 for quite a bit. So I want to get towards that level, maybe 62 would be where I want to be at, because as you can see, a lot of volume here. If we get assigned here, we could probably roll to get under that pretty quickly. So that's what I'll be looking at. O is one of those I don't really care about earnings on because I'm fine with holding it long term, and it's just selling a put position. If I guess I assign the stock, I'll just turn around and sell covered calls on it. So I don't care so much about earnings on this one. So I'll go ahead and go to trade. And the first thing I want to do is look at the next expiration, which would be October 15th. There's only 12 days left, so the premium's going to be pretty low. I said I want to be at the 62 level. So if I look at that, that's only 20 cents credit if you get ask it at this point. So that's not really that much. What was that, $17? Wait, no, sorry. $2 a day for selling that if you want to sell the October 15th. If you look at the theta here. So instead, I might make a longer contract on O, so a little longer than 30 days, which I'm fine with doing. November 19th, you can sell the 62.50 for pretty good credit here. That's a little bit over 1%, maybe 1.3% return for a 47-day hold. It's not something to write home about, but at the same time, it's easy money that you can just sit there and collect. This has a 70% chance of being out of the money. You should collect $2 a day right now, but as it gets closer to expiration, they just going to increase and it'll burn a lot quicker towards the end. I wouldn't sell the 65 because I could really see it going back down to like the 60 to 62 range. But if you really don't mind holding the stock, you could sell the 65, collect that higher premium, and if it stays above 65, you got a nice little 3% return on your money. But you have a 50% chance of it being in the money, which means you'll probably take assignment, which is okay if you like holding stock. So again, an O would be another sticker that I'm looking at. You can use your risk tolerance to figure out what strike you want to play at. You could do a spread, but at the same time, it's, well, what would that spread be? You get about 25 cents credit here, probably. Maybe a little bit more, 30 cents credit. So I guess you could do a spread here, $30 on 250 risk. But with O, it could drop down. I'd rather take a sign of the stock and then sell covered calls against it. So if you enjoyed this content, go ahead and give it a thumbs up for the YouTube algorithm. And good luck next